Shut up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, welcome back from Thanksgiving. Happy Monday. If you make sure you have your brokerage account open so you can follow along. Set your YouTube video quality as high as possible. It helps you read the numbers a whole lot easier. Have a calculator with you so we can do some easy math. If you have a question or a stock you want to go over, leave it in the chat below. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right, happy Monday. Let's look at our open positions. Pretty much everything is flat from where we left it last Monday over the holiday break. The only big mover is Roku here, down. I think the entire spread, it's short 95, 100. The entire spread, I believe, is in the money. So we can look into rolling that today if there's nothing else available. Everything else, these are all December expiration. We're about 18 days out. So let's see what we can find new to open, okay? First up today is Shopify, SHOP. So we've had this big gap up after earnings, and it's continued this move higher. And I think they had some information come out from Adobe saying that their sales are doing well. Black Friday sales surge. Yep. Okay. We are now trading only January expiration, okay? 53 days to expiration. I want to look to sell the call side here. If we sold 85 and bought the 90, what do we get? Let's take out our calculators. That's 117 minus 61 divided by 2 and divide that by 500. 5.6%. That's not bad. On the put side, you'd have to sell the 62. And buy the 58. So it's 79 minus 41 divided by 2 divided by 400. Not as good. So if you want to sell this one, sell the call side. I do like this one. We'll make a note of it and come back later. Next, let's move on to Affirm, AFRM. This one's up 14% today. Maybe this is the one that had. Let's see. No news, but it's up big. Earnings are on the 7th of February. Actually, let's go back to Shopify really quick. When were earnings on Shopify? Earnings are in February, so we're good on that one. Back to Affirm. Up big, like I said, up 14% today. And again, let's look at the call side for January. If you sold the 37.5 and bought the 42.5, that's 109 minus 53 divided by 2 and divided by 500. Same thing there, 5.6% return. All right, so that one's interesting as well on the call side. Anything on the put side? I'd skip the put side. Let's move on. Next is CCI, Crown Castle. I think there was a investment made by Elliott. Earnings are January 24th. Yeah, shareholder Elliott Investment. Okay. On the call side, you'd have to sell the 120 and buy the 125, but you don't have great liquidity, not a lot of volume in this one. So we'll skip this one. Next, moving on. Upstart. Up 5.5% today. Earnings are February 13th, so we've got some time. I don't think there's any news here. We've traded Upstart before. I think selling the call side looks interesting here. For January, let's see. If you sold the 32.5 and bought the 37.5, that's 80 minus 36 divided by 2 and divide that by 500, 4.4%. So not that great on the call side. On the put side, you'd have to sell the 17.5 and buy the 12.5. That's 42 minus 6 divided by 2 and divide that by 500, 3.6%. So no good on Upstart. We'll skip this one and move on. Let's look at Pinterest, P-I-N-S, up 3% today. What's today? The 27th, initiation of coverage with a buy rating. That's why they're up. Same thing here, big gap up after earnings, and it's continued its move higher. Let's take a look at the call side. Skip the call side. 36 is too close and the 37.5 is too far out. On the put side, you'd have to sell the 29 and buy the 26. That's 34 minus 10, 24. Divided by 2 and divide that by 300, 4% on the nose. That's not that great either. We'll skip Pinterest. Next, Baba. Earnings are February 22nd. Let's look at the chart. Kind of breaking down below here. On the put side, we'll skip the put side. You'd have to sell the 65. You don't really get paid for it. On the call side, same thing. 85 is too close and the 90 is too far out. If you want to sell the 90, buy the 95. 70 minus 40, that's 30. Divided by 2, divided by 500. Yeah, 3%. You don't get paid for this one. Moving on. Kraft Heinz. They were in the news this morning, but not a lot of movement. We're going to skip this one. Novo, NVO. Same thing, not a lot of volume, not a lot of liquidity. That makes things difficult for us, so we're going to skip this one. Splunk. Looks like they have earnings coming up. Yes, earnings are on the 28th. That's tomorrow after the close, so we'll take a look at this one on Wednesday morning. Wonderful. Let's move on. It looks like they got a downgrade this morning. Lucid. It's only a $4 stock. Never mind. I didn't know Lucid. Lucid was in the news this morning, but it's only a $4 stock, so we're not going to be able to trade the options on this one. It's too... You have to sell the 3 and buy the 2.5. That's cuckoo. Moving on. GE Healthcare. Down 4% today. Their earnings are January 29th. In the news for some reason. Here's our chart. All right, let's look at the put side. Hardly any volume. And plus the 65 is too close to sell and the 60 is too far out. On the call side, nothing there. All right. Foot Locker. They're in the news, down 2.5%, but looks like they have earnings coming up the 29th. That's in a couple days. Later this week, we'll follow up on Foot Locker, see how they do after their numbers come out. Okay. Let's look at the TLT. A lot of movement in the bond market. Kind of bottomed out here at the end of October. Should have sold puts here. We didn't. Now it's had this move up. Yields have come down. Let's see what the call side looks like. If you sold the 96 and bought the 101, that's 55 minus 15 divided by 2 divided by 500, 4%. Not that great. Sometimes you can get 5%. That's what we're looking for. Pan W, Palo Alto. I think this was left over on my list from before Thanksgiving. It had this gap down in earnings. But looks like we missed this move. So we'll skip that one. We'll take it off the list. Coinbase is next, COIN. This is kind of what I've been waiting for. This move after earnings and a continual move up. Okay. As long as we can move past 150 on the call side. And the strike's at 150. That makes a lot of sense. So if you sold for January the 150, bought the 155, that's 430 minus 360 divided by 2 divided by 500, 7% on the nose. That one's very interesting as well. We'll make a note of Coinbase, COIN. Okay, liquidity. Some volume here. Your spread is 20 cents here. Maybe not. Liquidity's not that great. We'll see. Let's check USO and XOP. I know oil's been down a bunch. Maybe not, just hanging out here at the 200-day moving average. There's no clear direction here, so that's kind of... You could sell the puts or the calls. If you sold the 60 and bought the 55, that's 87 minus 44 divided by 2 and divided by 500, 4.3 on the put side. On the call side, if you sold the 80 and bought the 85, that's 102 minus 48 divided by 2 divided by 500, 5.4. So if you want to sell the call side, you get more, you get paid more. Liquidity's okay. Liquidity on the 85 is fine. Let's look at XOP as well. It's going to be a very similar chart. And kind of just hanging out here at the 200-day moving average. On the put side for XOP, if you sold the 125 and bought the 120, that's 143 minus 85 divided by 2 and divided by 500, almost 6% there. On the call side, if you sold the 152, then you have to buy the 155. It's only a $300 spread, so it's 117 minus 81 divided by 2 divided by 300, 6% there as well. So same thing, both the call side and the put side is pretty evenly priced. That makes sense. Okay? Let's follow up with Expedia. Now that post-Thanksgiving travel is done. Same story like the rest. Big gap up after earnings and then a rocket ship up. Looks like it could be topping out. You can see it's hitting resistance from way back in August of 2021. Let's look at selling the call side here. If you sold the 150 and bought the 155, not very liquid though. 172 minus 107 divided by 2 divided by 500, 6.5% there. Good liquidity here on the 150, some volume today, but very liquid on the 155. Shame. Shame. Where's 150 on the chart? 150 is right here. I like this one a lot. Let's open this one, see if it gets filled. Okay, so we'll sell the 150 and buy the 155, okay? Go to verticals. Width is 5, the 150, 155. It's a 20-cent spread, so we'll go ahead and go all the way at the ask. If this one gets filled, great. If not, that's no worries. We'll sell 1 January expiration of the 150 call, and we'll buy 1 January expiration of the 155 call. Receiving a credit limit of 77. Okay, we'll preview this. We'll double check the ticket here. Okay, sell 1 January 150 call and buy 1 January 155 call, so $500 wide spread. We'll receive a credit of $77. That's important. We'll go ahead and send that out. It'll hang tight here. All right. Let's move on. Let's look at target next, TGT. I actually forgot, when are earnings for Expedia? My bad on that one. Beginning of February. So this is post our January expiration. So no worries on earnings for Expedia. Always important to check earnings before opening a new position. My bad. All right, next target, TGT. Earnings for Target are at the end of February. It's kind of lost some momentum here post earnings, gap up, and it's kind of floated up slowly, just drifting higher. On the call side, you'd have to sell the 145. You're just not going to get paid for it. 81 minus 40 divided by 2 divided by 500, only 4%. So skip the call side. You don't really get paid for it. On the put side, if you want to sell the 120 and buy the 115, that's 91 minus 49 divided by 2 and divided by 500, 4.2% there. So we're going to take Target off the list. Great. Let's go to our IV rank scanner and we'll sort by volume. Everything. Look at how low volume all this is, or sorry, how low IV rank this. December, last week especially, was very unexciting. Very low volatility. Now here we are in January and there's hardly anything going on, hardly any movement. If you look at the SPY really quick, let's look at the chart. The SPY. The entire past week, it's just pretty much gone nowhere. The last big day here was November 14th with a big gap up. Okay. What else we got on this list? Pinduoduo. Earnings are the 28th. So tomorrow morning we get earnings from Pinduoduo. We'll follow up tomorrow. Chinese stocks are always fun. Wow, there's nothing on this list. Cannabis ETF, no thank you. Pfizer, what do you got? On the 28th, that's tomorrow, there's an event, the Evercore ISI Health ConX Conference. The CFO and the EVP will present. No. Let's take a look just for fun. PFE. There's gonna be nothing here. Call side. If you sell the 33 and bought the 35, $200 spread. 41 minus 14 divided by 2 divided by 200. Almost 7% though. That's interesting. You know, if you have a really small account, like an $1,000 account, you could sell this $200 spread. On the put side, I'd skip the put side. You got to sell the 27. You don't get anything for it. So, call side's interesting. Where's 33 on the chart? $33 is right about here. That's very fairly priced. You're getting 6.7% return. You're only risking $200, and the 33 strike is way up here. And you've got this big downtrend, a lot of momentum to the downside. It probably won't catch a bid till maybe 27-ish. I kind of like this one. A baby spread. Let's go back to this one more time. I'll do this one too. $200 spread. It's the worst. That's the most you can lose. We'll sell the 33 and buy the 35. January expiration. One more time on earnings. That's why. Earnings. Oh no, earnings are after this expiration too. Okay. Sell 33, buy 35. We'll go to verticals. Change this to 2. The 33, 35 is right here. We'll go for the ask. Hold on. Something says debit. Mess this one up. There we go. Sell 1 January 33 call and buy 1 January 35 call. Credit 28. Let me do math one more time. 28 divided by 2 divided by 200. Yeah, 7% return. And again, you can sell 100 of these if you want. I'm just going to sell one of each. Preview that. Double check the ticket. Sell 1 Pfizer January 33 call to open. And buy 1 Pfizer January 35 call to open. Receive $28. Just remember there is that event tomorrow, so there may be some news that comes out. I don't know. If there's great news, the stock pops. Only risking $200. We'll send this one out. I'll hang tight here. Okay, moving on. AI, nope. Earnings are on the 6th. UNG. Let's look at Boil and Cold. First, Boil, B-O-I-L. These usually aren't very liquid. Okay, what a mess. I hate these ETFs. On the put side, is there any liquidity? You'd have to go all the way out. No. You just sell like with the 22 or the 21. On the call side, you'd have to go all the way out to the 56. Liquidity is not great here. Let's look at cold really quick. K-O-L-D. See if it's any better. No. Very little volume, very little open interest. On the call side, on the put side. The 43, 0 volume, hardly any volume. Okay, let's move on. XBI is the biotech ETF. Plug. It's only a $3 stock. We'll skip. Riley. There's an event on the 13th. Investor Day. ALB. Haven't seen that one in a while. Earnings are in February. They may bounce back strong. May. I think the last thing we'll do for today is we will roll our Roku December spread. Okay, let's take a look at Roku really quick. So our strikes are the 95. We sold the 95 and bought the 100. So our entire spread is underwater. If expiration was today, this would be negative 500. Okay? But since there's still time left, we're not down. We're only down half. Okay? And that's not bad. But what we can do is see if we can roll for a credit. So when rolling, make sure you have a piece of paper and pen with you. We're going to do this one together. Very important rolling. Doesn't happen often, but it happens and you need to know how to do it. Okay. So first thing we'll do when rolling is we'll take the ticket here. So our cost basis was 69 cents. So that'll be the first thing you write down, 69.69. That was your cost basis. Essentially what we're going to do is we're going to close this December contract for a loss and reopen the January for a credit. Okay? So 69. We're going to cancel this order for Roku. So now it's canceled here. Cancel. Now let's go to Roku. We're going to click on this. We're going to click on roll. So what we're going to do is we're going to close out the December position and reopen the same exact January position. So we're going to buy to close one December 95 call and sell the 100 call. We're closing that out. And we'll sell the January 95 and buy the January 100. Credit. You see how it says 0.65 as the debit? That's the market price. You don't want to ever pay to roll. If this entire thing was a debit, just leave it. Leave the position open and the chips will fall where they may. Never ever pay to roll a position because then you're just paying money. If you receive a credit, it actually brings your cost basis down. So we'll go for 5-cent credit. That seems fair. Limit credit, 5 cents. Okay, we'll receive a credit of 5. Let's preview this ticket. One more time, double check these tickets, especially when it's when you're rolling, okay? So buy one December 95 to close, sell one 100 to close. And now we're going to open a new position, sell one January 95 call to open, and buy one January 100 call to open. Okay, and we're going to receive a credit of $5. We'll go ahead and send that out. It is a limit, right? Everything's limit. Good. Send it out. So this Roku will stay open all day. So for the Pfizer and Expedia, we'll go over what we'll do if these get filled. So if the Expedia position gets filled, that's 77 divided by 2, we'll set a buy to close order at 38 cents. If the Pfizer position gets filled, we'll set a buy to close order at 14 cents. And if the Roku position gets filled, well, I need to know what we get filled at. So we'll do that one tomorrow. If this Roku roll doesn't get filled, we'll try again tomorrow, okay? If it does get filled, we'll go over the numbers first thing tomorrow morning, okay? I think that'll do it for today. Thank you all for watching. Tune in every morning. On the West Coast, we go live at 7:15 a.m. and we go live on the East Coast at 10:15 a.m. We all trade options together. We'll have some fun. Tell your friends who are trading as well to tune in and subscribe. We'll see everybody tomorrow morning. Happy Monday.